Morning everybody, it's Chris here from Serene Education with the 4 majors as update for the 25th of June 2012. Just going to be going with the 4 majors this morning, starting with the euro against US dollar. I have in front of me my four chart templates, starting with the weekly top left, working to the hourly bottom right. So weekly, daily, 4 hour, and the hourly. Looking at the weekly, let's have a look and see what's been happening. I clearly see a prior swing here, or prior support here in early January. You can see price has now been trading through it and finding resistance on the underside of it recently. So we had a nice breakout going through, a massive sell-off through May, and then this bounce to the underside of support to find resistance, and then price last week closing the week very, very indecisive, a spinning top. We want to see a nice decision candle to confirm this where market sentiment lies, but you can see, however, that overall sentiment for this pair has been very, very negative since August. The highs you saw here in April. If I back up even more, you can see how much price has been moving sideways since 2008. Very, very indecisive compared to what it was like before then. So what's most important is you can see that price has actually broken through a major support just recently. You can see through early 2008 support, 2009 support, 2010 support, 2012 support. So a major support and resistance level just recently been breached, and you can see that at 12,6,500 that occurred. So if we stay below 12,6,500, then ultimately we're looking for very negative sentiment, and we should see price now moving in the direction of the breakout. So if we take the high of here on the weekly to the support, the low that we saw just recently at the bottom of June, to the bounce, the upside here to this candle over here just above the 1265, you can see these as potential daily targets now, or weekly targets. 23.6 here at the 12,4500 could be our first target. Back to this potential swing here, the support. 38.2 here at 12,300, the 50% at 12,200, 61.8 down here at the 120.50 mark and lower. So 100% would take us down to that all-time low that we've saw way back in 2005, guys. So on a weekly, potential targets could be the bottom end here at 12.45. So if we go to our daily, okay, you can see the hesitation under 12.65. See, that's where prices fell to actually find support now above. We had a nice little breakout to the upside, however that failed to materialize. Price moving higher, hesitating above that area. We wanted price now to find support above that to kick onto the upside. That failed to materialize. This candle over here engulfing all of this indecisive here, all this attempt of 12,6,500 and then moving lower. So as it stands now, we always want 12.45. We need to put that in as a potential target. There we go. Just below us here, this prior consolidative range here, the 12,300 is another one, which happens to be the bottom here, at the bottom of here in June. So we have two definite targets to start with already for this week. If price continues to the downside, CTC is very much in our favor. We are swinging lower. The only thing that's missing over here is the red arrow, and the candle still needs to close red. So as it stands now, you can see this little upside move here. Swing highs, swing highs, swing highs being breached, and now we've got an indecision candle on the daily on Friday. At the underside of that, now we want to see a decision candle. It's got to be decisive. It's either moving away lower to the downside or reattempting the 12,6,500. That's what we want to see. So on my 4 hour, you can quite clearly see where the institution is above price. It's a negative signal. At 12,6,500, that massive support and resistance level that was breached recently, you can see price is trading below that. So that's another confirmation signal that's bearish. Everything is looking bearish at the moment now. We have red, red, red. All my candles are red on my 4 hour time frame. This 23.6 area here of this move from the high here to the low to the pullback. You can see the 23.6 major support and resistance on our 4 hour has or is in the process of being breached. However, this 4 hour candle needs to close low on that. Get a close low on that, then ultimately we should be targeting these areas down here at 12,300 for the long term. On to sterling. Let's have a look at sterling on the weekly. Price very indecisive last week. Look at that. Doji, not much trading range. Very indecisive after a pullback of some magnitude. We've seen price now actually closing midway, but very indecisive. Notice all the moving averages above price and consolidative, so not really giving much away. The CTC has gone back red again. However, that 15,300 still, you can see price is still trading above that, and as long as it maintains above 15,300, then ultimately we're still looking for support long term. This is a weekly chart, guys. You can see here through 2010, through December 2010, September, October of 2011, January of 2012, May and June of 2012, a lot of support through here at 15,300. For this to be overall negative, we need to see a break of that. Okay, and as long as we're trading above that, then there's ultimately more potential for upside still to be favored. Price is still trading below all the moving averages. Ideally, you want to get above all that, but as long as it maintains above 15,300 long term, it's still likely to continue to either, as it's doing at the moment now, running sideways but bouncing at the 15,300. So indecisiveness on our last week, we want to see a decision candle. So if we go to our, if you look at the high here in May to the low in January, you can see that 23.6 has been broken. However, 38.2 here at 1565 hasn't been breached yet. If this is still to continue upside bounce like it's done over here, bounce, moved higher, bounce, moved higher, we do need to see 38.2 being breached for us to even look at contemplating at 50%, 61, 78, and ultimately the 100%. So if we go to our daily, you can see that the institution moving average is still above price, so it's still negative. Even though we're still trading above 15,300, it's a major support. You can see that 15,300, a major long-term week monthly support. You can see that price has failed to actually get above that 1575.50, which have taken price higher, and in doing so, it's now formed a resistance level, and you can see price reverting to the downside because of that. It needs to break. It needed to break above this in order to see price revert moving to the upside. Notice we have two parts of our CTC. However, the CTC's these lines on the histogram on either side still remain negative. So this pullback was still it was more a knee-jerk selling or taking profits. And now they're taking profit. Now they're looking for potentially further downside to occur. So first target would ideally be the 23.6%. Get below that, we're looking back towards that 15,300 quite soon. So as long as it maintains below 1575, intraday we should be looking for nothing more than shorting opportunities. You can see that this move over here, for example, swing high has been breached now with an indecision candle. You want to see a decision candle either downside or upside. If it goes upside, it needs to break above 38.2 to be positive, bullish intraday. It needs, and if it breaks or downside, it needs to get below 22.6 to be negative for the remainder of this week. US dollar Swiss franc is next. Let's have a look at the weekly. Moving higher since these lows in August of last year, and just recently you can see price actually managed to tackle the 960, which happened to be price support and resistance in the past, through September, October of 2010, through December, January, February of 2011, into December, January of 2012, and recently we saw price testing it, however not managing to find support and moving lower. It's now reattempting that 960. We need to see a nice bounce on that, a nice bullish engulfing to clearly confirm this is still upside favorite. Just remember, recently look at the CTC on a weekly, a lot of negativity. However, we've had the blue now, we've got everything in our favor. It's just that we want to see a clear confirmation break and close higher than 960, because at the moment now it's just playing tic-tac-toe with it. Not a very decisive breakaway, if anything, and we want to see decision. So just be patient, and you shall be rewarded. We just need a nice confirmation break here, and then we should be looking at ultimately at the one or the parity here at the institution moving average is our first target long term. So if we look at the daily, always put that 960 in so you know where that massive support and resistance level is. You can see price is now tempting it as we speak, going into it this morning on the Asian Open. We need to see price trading well above that in order to get a nice clear signal to the upside. Otherwise, you get into it only for price to pull back and then sideways, and then it moves to the downside, forming these lower swings. Now, it wants to, by reattempting these highs here, it wants to actually maintain or to stay above that level. But the thing is, though, it needs to definitely confirm that, and it has to give us a genuine signal to the upside. So, a nice bullish engulfing would definitely clearly give us some sentiment for long-term support. Otherwise, we could potentially see price reverting to the downside because it's clearly failing here. So we'd rather be patient with this, get a nice break above here, consolidation, and then a definite confirmation break to the upside. Here it was the same thing, breakout, the pullback. We wanted confirmation. I wanted to see a confirmation break to the upside. That failed, materialized, and price reverted to the downside. Over here, breakout. I wanted to see confirmation. Came out with a spinning top, which is an indecision candle. I wanted a decision, and the decision candle was negative. Shooting star, and it moved lower. Now I want to say, great, if this is genuine support, because you can see price actually hesitated here. Give me a bullish engulfing, and then you have all my attention. That failed, materialized because I've got a bearish engulfing instead, and price reverted to the downside. So patience is very, very important when looking at price when it's trading roughly around a very strong support and resistance level. It's far better just to wait to get a confirmation, definite signal that it's genuine bullish breakout or a bearish breakout. Okay, so here, same thing. Rather wait to see a confirmation, major support, resistance before we look at getting into this to the upside. Otherwise, look for resistance over here at 960 and then potentially look at 945 as our first target to the downside if that happens. You can quite clearly see a hesitation area at this level here. So resistance here, bearish engulfing, 945 is our first target weekly. Break above here, and we should be targeting 970, 975 as our first target for this week. Here's started Japanese yen, the last pair of the day. Let's have a look and see what's been happening on the weekly. A nice bullish up candle, bullish engulfing to the upside. And in doing so, price is now trading at the other side of the 80, which happened to be a major support and resistance level. Look at this, guys, through October, November, and December of 2010. A lot of support right through until June, July of 2011. Major support for this pair. Price actually just consolidated in a downside trend for a long period of time. Then we had that breakout. Then it consolidated even more just above the 76. And then we saw this massive move to the upside, breaking higher, then trading above 80. However, not finding any support above it and trading lower. So it was imperative that price actually bounced to the upside on this breakout, but that failed to materialize as we headed lower, bearish engulfing to the downside. Now for the first time, price is trading above it again. Notice the 20 and the 50 period moving average are below price. So now what I need to do now is to remain above the 80. Okay, so we move to our daily time frame, put in the 80, major support and resistance level, got to be put in. All these important support and resistance levels for these majors have to be noted on your chart so you know where price is trading relative to it. You can see quite clearly now, all the moving averages below price on our daily. We have a break of the 80. Hesitation above the 80. Notice today's candle is blue. Okay, and the CTC for the first time in in the last 2 months has started to go blue. It needs to find support now above 80 to see any indication of potential to the upside being on the plate. So the lows here in February to the high here in March. See with that 50%, guys, at the 80 mark. It needs to find support now at the 50% and the 80, and then we should be looking at 81 as our first target. Second target here at 82.30, and ultimately way up here at the 8400 as our third target. Okay, so it's imperative that price finds support here in order to look at long-term targets to the upside. That's it, guys. Hope you have a fantastic trading day today. Not a lot of news out there, but as I say, still waters run deep. Always keep a lookout. Things in Greece are still there. Spain's still there. These things will all still be factoring in. A lot of banks were recently downgraded, so that's still negative for most of the banks globally. HSBC, Barclays, a lot of them out there. The bigger ones have been downgraded recently, so just keep a heads up. See what news is out for the remainder of this week. See if there's anything that's definitely going to be playing or giving us or playing on price action. Other than that, we've seen price on some of the pairs breaking some major support and resistance levels. We just want to see if they are genuine sentiment breakouts. Okay, it's always important to be patient. Look for the genuine sentiment breakout, guys. We don't want to be faked into anything. That's the reason why the CTC is such a great one. Over here, for example, on the yen or the US dollar yen, we've seen a nice clear break above 80. Now it's got to confirm that it's a genuine breakout to the upside, and once it's confirmed that, i.e. found support, then we look for foreseeable longs on this pair. It's the same with the other pairs. Just make sure they are genuine sentiment breaks up. Excuse me. And then what we'll do is we will trade them. Okay. So follow the rules of the template. Follow the rules. back it up with sound money management, and keep it simple, guys. Always plot major support and resistance levels. Once you have those in place, look at where price is trading in conjunction to those support and resistance levels. Is it genuine sentiment, positive, negative? And then if you do get a clear signal from the market, where are my first target, second target, third targets? How much am I risking in order to get these targets? All that's got to be applied to it. Okay. I'll see you first thing tomorrow morning. Have a great day. Until then, trade serenely.